It's September 21st, it's Monday, and after taking through the account, I want to talk about a stock pick that I have for myself that I'm thinking of buying, and hopefully you guys can help me out a little bit, and if you have any information on it or have done any research, that'd be nice, but I'm going to just throw it out there and see what you guys think. Also, I found a couple of news items funny and entertaining, so I want to just mention them over here, and then I want to show you the extensive list of moves that I made today, which could be to my detriment, we'll see, but the market's been going down now, 10% of the NASDAQ, so it's time to start catching some knives, you know what I mean? And we'll see, maybe I'm quite a bit too early starting to catch those, especially since the elections are coming in, but I have some cash reserves still, so I'm not like going all in, I'm not going in debt or anything like that to try to purchase the market at these levels, but soon. Okay, here is the account, 114,754. So I was 117 last time, so $3,000 less or so. I'm gonna go through the positions real quick. I'm going to be scrolling, and then these are the options first. You can see the ticker, strike price, whether it's put or call, the expiration date, whether it's a seller or a buy, and the number of contracts is enumerated here by this number. So I'm going to scroll through, and you can pause your video at any moment to try to figure out what my positions exactly are. And they're quite extensive now. I think I have probably over 65. Actually, I got to renew these uranium calls, so probably less than 60 at this point. Option play is going on right now. And then you see the positions, and obviously Apple carried the entire day. Interestingly enough, I have an activity related to Apple that I'll show you in a sec, but everything else basically was red, maybe except Cameco, I think. Nope, even Cameco went red, just by $21, but everything else I own is red except Apple and some of these options, which is what actually gave me the positive balance on the day. But that hasn't been the case for like a couple weeks now, right? Apple's been dropping, the rest of the account been fairly leveled. So I picked up quite a bit of shares, and I want to go through the activity here, and we can go to the message tab. You can see all the green dots here are unopened. So I'm gonna go step by step just to see what kind of moves I made today. So first of all, I bought some Apple shares. Wait. That's interesting. Am I supposed to scroll the way down? Oh yeah, okay. So I bought 10 shares at 104.39, which is very early in the morning, and it closed up, you know, like $6 higher. So that's, I guess, cool. That's $60 there worth of asset valuation. And I actually bought 10 more. Best price available. I'm sorry, I bought 20 more at 104.2. It was a market buy because I didn't want to miss that little dip down to 104 in the morning. And then earlier I bought 8 shares at 108. I think that's like yesterday or something. So, but early in the morning, this is what I did. I bought a total of 30 shares of Apple at around 104 and change, and it's working out so far. You know, obviously divided by 4, that'd be like 7.5 shares worth of the old ones before the split. And then here we go. I have I bought some emerging market ETF, DEM, I think, right? Yep, I bought a couple shares of that at 36.8 because that's one of the positions I never plan on selling. It's just a dividend collector, and every quarter I'm going to be getting a dividend, and that's that. That's like, I don't plan on selling it, and maybe for like a decade at least. If things go okay, I mean, obviously if things deteriorate, I'm going to reevaluate, but I don't plan on really doing any kind of like active management there. So Russian ETF, I sold a put at $21 put, received $47 for that, which was nice. Okay, so and then I have another put that I sold for Cameco at $9.50. Right now it's sitting a little bit above $10, I think. And then I bought some Main Street Capital, a few shares, just a couple shares, 35 shares. No, I'm sorry, this is like way old information. 5 shares is what I bought. And then I bought some 50 shares of PCY, which is emerging market debt bonds. So 1 contract of EWU, which is the United Kingdom Fund Index. So I opened up a contract there, and then I bought some Hercules Capital. So it's a pretty interesting company. It provides funding to, like startups and other Silicon Valley related companies. So it's worth checking out. I mean, I've heard a lot of people recommend it and stuff, and they look alright. Obviously, it's kind of a risky bet, so I don't put that much money in it. But we'll see where it goes. Then I bought a few more Realty Income, 3 more shares. And then I'm just basically trying to beef up my positions at these levels. That's kind of what I'm doing. And so I've sold some calls, or I tried to sell some calls. Oh, okay. Never mind. I sold a put on ET, Energy Transfer. And then, why is it still green after? Okay. And then finally, I sold a put on Bud. Okay. Anheuser-Busch. And so we'll see if that pays out. I mean, I'm just kind of going for value here, right? There are a lot of these companies. I mean, we have natural gas, beverage staple. We got like Main Street, industrial financing. We got uranium, which is very low in price, right? Like deep value here. And got emerging market bonds and emerging market dividend companies, which are also like pretty value. So value relative to growth, there's been this debate right now in the investment circles about value versus growth, and how the growth stocks have really outperformed the value stocks, and value's kind of been left in the dust. And I'm actually been looking at them, and I mean, it just makes a lot of sense. If the market is pulling up and there is a ton of money being swoshed around, then eventually all these companies that are actually generating revenue and distributing it to the owners of the company, to stockholders, then they're going to benefit from that money as well. I mean, it's not just going to be the best funnels, right? It's not just going to be the iPhone producer, right? It's not just going to be Google and Facebook and Amazon. Like, people still do banking as things are right now. They may not in the future, but right now they're they have a bank account. It's linked into all their accounts and their trading accounts and whatnot, right? So you've linked one of your bank accounts to Robinhood, so you're using a bank. And people still use oil. I mean, I'm wearing oil right now, right? I got my pants are made out of oil. All right, like, I don't know, this shirt's probably partly made out of oil, and so are my socks, right? I'm just wearing oil. I mean, everything is made out of oil. It's plastics, right? So I still drove the car today, right? I put gas in it. Okay, so it's gas. So all these materials that we're still using every day, we might not think of them as the future, but we are using them, right? The companies producing them are generating some kind of revenue. Whether or not they're profitable, that's a different story, but they are generating revenue, right? Things are being exchanged for oil-based products and gasoline and everything else. And we're still doing banking and still paying rent, some of us. Okay, so these things keep going on, and so I'm thinking, like, all these stocks that are left in the dust, they're bound to have some kind of recovery. And the thing about it is that because the valuations are so low, relatively speaking, then the risk is not that much, right? The risk that I'm taking for buying them is not that much. Like, the risk that I take if I buy Tesla right now is huge. Yeah, so if something goes wrong with the company, that's a big way all the way down. It could drop by like 90% down to almost zero. Obviously, there's still some upside. I mean, it could become a multi-trillion-dollar company, and in fact, I think it has a decent shot. I think Tesla probably got. I put the number up back there. I made that call like months ago. That it has about a 5% chance, I think, to become one of the top 3 companies, if not the top company in the world, which is kind of a bold bet. But I'd give my rationale. I've given my rationale in a different video, but to summarize, it just has to do with the fact that they're layering, the car is basically their iPhone, and they can sell software on the car. They can basically monetize, like they already are monetizing their customers, but they can continuously monetize the customers and keep updating the car and make them buy a new car, just like Apple with their iPhones, etc. And they can come up with all kinds of content for the car, and that's a really expensive device. And the more expensive device, the more dedicated your customer is, the more loyal your customer is going to be. So you can really exploit that as a company. So anyway, but that's a whole different conversation. So my point is that there's the value stocks have a lot lower of a ground floor than a high flying tech stock right now. And I do have a tech stock, right? Apple is still, although you can kind of look at it as a growth / value / tech / anything stock, but I'm looking for something more slow and steady in order to sell puts and calls for. Okay, that's about it. Like, I want to grow this a little bit slower, and if there's going to be an explosive action, it's going to come from the Apple calls. So, all right. So this is the week chart and the month chart. Pull it out to 3 months. You already started see the knife. This is the year chart. You can already start seeing the knife develop, the handle of the knife here. And if it starts dropping around election time and we have a vertical line down, then I'll be ready to go all in and actually start going on margin again. If we reach levels that we were at on February, then I'll probably go pretty hardcore in. I'm gonna go on margin and start buying stuff up. If you want to go back to the episodes where I had the bottom of March here when I mistimed the knife catching procedure, then that's pretty entertaining how far in debt I was, but I was able to swim out, and now I'm $24,000 high, $22,000 something higher than I was at the February highs, which is more than you can say for most indexes. So it worked out. Pretty confident that it's going to work out again, but I don't want to rush into anything right now. I want to make sure I take it slower than I did last time and try not to overdo myself. All right, but this account isn't going to take itself to $1 million. I have to make some kind of moves. So it's going to happen, right? Okay, so I've been talking a lot about really nothing. Oh, the news items. So I thought it was pretty ironic that there was some companies. This is how I understand the story. So if you know the story better, let me know. But the way I understand the story is there's a few companies like GM and like Fiat Chrysler or whatever that wanted to introduce a law in Michigan where Tesla couldn't directly sell to consumer. They had to go through dealerships. For some reason, they wanted to force their hand there because otherwise they're putting the dealerships out of business or whatever. I don't exactly know what the exact incentives were, but obviously, going to direct to consumer, you're skipping a lot of the steps and not really making money and not competing with the status quo. So usually that's how legislation is done. They prohibit new innovators who try to not cut corners, but find new, better ways to do things and keep more of the profit. Like the establishment doesn't like that, so they'll pass legislation and try to stop it. But it backfired, right? Something happened where now instead of Tesla being forced to go through the dealerships, they were allowed service centers, and they were actually exempt from another legislation that prohibits electric vehicles to be sold direct to consumer in the state other than Tesla, right? So like Lucid or Rivian or whatever kind of EV comes on the market, they cannot sell to direct to consumer, right? They're prohibited. So for some reason, Tesla got an exemption, and those are the exact kind of laws that form monopolies. If you're concerned about monopolies, well, that's what does it. But I just think it's ironic that, you know, these companies try to go after Tesla, and all of a sudden this legislation kind of backfired, and now anybody who wants to start selling to direct to consumer isn't able to do so except Tesla, which I think is hilarious. But anyway, that's just something I thought was funny in the news, and it's just a pretty backwards world that we live in right now. So it's kind of strange. But other than that, it was a really nice day today in California, and I enjoyed being out. I was able to play a little bit of tennis, which is nice, and overall enjoyed the day. It's been so smoky, you know. There's been fires for like the last 2-3 months or something. It feels like maybe the last month, but the sky was ashy and it looked like Blade Runner out there. So it's a really nice change. There was a little bit of rain, I think, and that's why it cleared up like that. But we'll see. Smoke's starting to come in again, so we'll see what happens. Hopefully you're not living in California and you don't have to live through this stuff, so I hope you're not one of the unlucky ones. Alright, I'm going to end it right there. Hopefully y'all are making a lot more money than I am. Obviously I lost, $18,000 so far. I'm down from the peak, but I will be recovering them, I'm sure, at some point. Hopefully you're making more money than I am, and till next time, alright? Peace out.